So Bitcoin goes up as the ISM goes up. So this kind of rate of change of Bitcoin will give us much higher prices if the ISM gets up to its normal cycle peak of somewhere between 56 and 65. And that will give us the magnitude of the rise in Bitcoin. We don't yet have a full handle on how high the ISM will go this cycle, but if it goes above 60, I mean, those are high prices in Bitcoin. That's above 300,000, maybe even higher.
Raoul highlights how Bitcoin's price is closely tied to macroeconomic indicators like the ISM Manufacturing Index. Historically, when ISM surpasses 50 and financial conditions ease, Bitcoin and other risk assets see significant gains. Powell forecasts that if ISM rises further, Bitcoin could potentially reach $300,000, driven by increasing liquidity and favorable financial conditions. This pattern mirrors past cycles, including 2017, when a weakening dollar and global monetary easing boosted crypto market. He emphasizes the importance of understanding market cycles, noting that volatility is integral to achieving substantial returns. Powell advises patience and strategic positioning, as the current phase of the crypto bull market offers immense opportunities. He expects altcoins to outperform once economic growth accelerates, as investors venture further into higher-risk assets during favorable conditions. Powell concludes that managing volatility, focusing on long-term gains, and staying disciplined in portfolio allocation are key to benefiting from the ongoing crypto market cycle. With ISM trends and liquidity improving, the stage is set for a potentially explosive phase for Bitcoin and the broader crypto market.
Don't FOMO and don't get fearful at the wrong points in the cycle. We have a framework, it's there to help you. We are still early stage within the final year of the crypto bull market when a lot of the big gains come. It's time not to lose your shit. Have patience. See the bigger picture. Also, how you construct your portfolio. I'm saying, well, 35% pullbacks are par for the course. And you're saying to me, oh my God, my fucking portfolio is down 80%. It's because you're not using the don't fuck this up thesis, which is you can only have a small part of your portfolio in the smaller tokens. This is the chart Julian and I came up with, global M2 in dollars with a 10-week lead over Bitcoin. Now, we were not sure whether it was going to follow this exactly because we had an identical setup in global M2 in 2017 in the last Trump cycle. And what happened is crypto collapsed 35% in a week and then slowly recovered with chop. I wasn't sure whether we were going to have the full sell-off to follow this pattern or we were going to go sideways over the period. We eventually went sideways first and then had the sell-off. Either way, it's on track exactly as global M2. What it's saying to you is that financial conditions that tightened last year due to the dollar rallying in anticipation of Trump and also rates going up in anticipation of tariffs, well, that is what's playing through now. Now, if you look at the chart going forward, that reverses. Yes, there's going to be a period of chop. We're going to be finding the lows around here, and I'll come more on that in a sec. Then there's a period of chop, and then we start coming back up the other side. So it's nothing to concern yourselves with. Volatility is part of the game. Without the volatility on the downside, you don't get the 150% returns or more on the upside. So financial conditions are kind of the big daddy of all of this. And the 3-month and 3-month rate of change of Bitcoin is driven by financial conditions, which leads by 3 months. So financial conditions obviously tightened because of the dollar and rates back in last year. Now Bitcoin has fully priced that in. So we're at the price point that is right. Now, could it then chop around along the bottom until it starts mirroring the rally in financial conditions? Possibly. This is also obviously very similar to the global M2 chart because they're all highly correlated. I just want to show it to you in a different way. The next chart is what you're hearing a lot of noise about is there's an economic weakness coming. Economic data's coming out weak. Yes, it is. And it's been driven by the dollar last year. Again, there is a lead here, and the dollar strength last year is causing economic weakness. This is the reason everybody wants a weaker dollar. China wants a weaker dollar so they can stimulate. They're desperate to stimulate. The world has a lot of dollar debts. They need a weaker dollar to service those debts. The US needs a weaker dollar to export goods. The global economy needs a weaker dollar. But first, we're going to see that weakening of the US economy because of what happened last year in the dollar. And then things will start to change again and the economic cycle will pick up. Now, that probably also means that rates will come lower because economic data is weaker. So that's playing into our idea that financial conditions are going to ease over time. So it's yet building a more positive case. No, it's not going to be a recession. All of that talk is nonsense. Economic data will weaken for a bit and then strengthen. But this is all good for us. Yes, tech stocks are slightly worried about weaker growth. But again, when we can look forwards, using the analysis, we can see recovery is round the corner. Now, when we look at last time around in 2017 when Trump came in, we saw a very similar thing. Economic surprises fell off a cliff because the dollar had strengthened in anticipation of Trump coming into office. That then eventually reversed and the economic cycle picked up massively and the dollar weakened hugely. And that drove what was a very large crypto and risk cycle, even though the Fed were raising rates. You see, global financial conditions are the key thing here. And that could be driven by the US, or it could be driven by China, or it could be driven by Europe. It could be any of these economic powers, or it could be all of them. So as the dollar weakens, we're already seeing that mechanisms like dollar yen are starting to move a lot more. Now, dollar yen is incredibly important because the Japanese banking system is the heart of the Eurodollar system. They're the ones who lend out dollars into the global economy, and that finds itself its backdoor into China that allows China to service its dollar debts. And if the dollar is weaker, then China can weaken its currency. It can then stimulate more aggressively. It needs to do trillions of dollars of QE to service the bankrupt real estate sector and other parts of the non-performing loan sector. So anyway, that's all to come. If we look at the dollar now versus then, very similar. Trump back then said the dollar is too strong. They've already talked about it, him and Scott Bessent. They've already talked about the long end of rates. What they want is the dollar to, first they will use the dollar as a bargaining tool with the Chinese, the Europeans, the Canadians, the Mexicans to get the tariffs in place. In exchange, they will give a weaker dollar. That helps everybody out. We can all then move forwards with the global economy, and the global economy should be strong. The back end of rates, which is like 10-year rates and stuff, well, that's going to help you guys too, because your mortgages will come down and borrowings for corporations will come down, and that gives everybody more money and that stimulates economic growth. This is all to come. They've made it very clear that that's what they want to do. Global M2 back in 2017, exactly following this cycle. Same kind of administration with the same tariff policies. Dollar reacted the same, the markets reacted the same. So again, don't expect these to be perfection, but expect this to start playing out again. If this is the case, then M2 is going to keep going up all fucking year. If that is the case, then crypto and risk assets like tech will do well all year. Another way of looking at it is global M2, it kind of consolidates for periods of time. Those periods of time tend to be crypto winter and then crypto spring. As we start transitioning into summer, you get this breakout in M2 and then a retest. We've had the breakout and retest, and what happens is, after that retest, that tends to be phase one correction of the banana zone. We started the banana zone in September, October, November. Then we start correcting. We continue to correct, and then we take off again. That's all to play for. It's very normal. It's playing out like a very typical cycle. The other thing that drives all of this is the business cycle. See, the business cycle is driven by financial conditions, liquidity, all of those things. But this is how businesses do when financial conditions get easier. The ISM survey above 50 shows the economy is starting to grow. Now, economic growth has been strong, but that's been driven by the government sector. But again, Trump and Bessent have said they really want the private sector to take over. So what they're telling you is they want the ISM to go up. They want the private sector to start expanding, regular businesses. And regular businesses expanding also drive Bitcoin.
Raoul Pal links Bitcoin's price to macroeconomic trends, particularly the ISM Manufacturing Index and liquidity conditions. He predicts Bitcoin could reach $300,000, driven by global monetary easing and favorable market cycles, similar to past crypto booms. Pal advises patience and strategic positioning, noting altcoins may outperform as risk appetite grows. He emphasizes understanding market trends and maintaining discipline to capitalize on the next phase of the crypto bull market.
Rising ISM will be good for your bags. And rising ISM it may still be choppy because we're still coming through. We need rates to go lower. But as that happens, we will see this pick up. Forward-looking indicators of ISM, like ISM new orders, less inventories, leads by 3 months. It's going up very sharply. Again, expected to be choppy, but it's telling us ISM should be going up. So that's good for Bitcoin in the future. 3 months' time, Bitcoin should be much higher. Okay, great. It's starting to get this now. The ISM also says, well, when that starts coming above 50, what happens is altcoins tend to outperform. Now, there's all this bullshit online. There's going to be no altcoin season. It's never going to happen. It's only a Bitcoin-only season. It's all about the ETFs, blah, 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 blah. Simply, probably not true. Again, we deal in a world of probabilities and no certainties, but probabilistically speaking, as the business cycle accelerates, people go further out the risk curve because they have more money. You're earning more money, your mortgage has gone down, you have higher savings, you can recycle them into assets. It happens at corporate level too, as corporate earnings go up and the overvaluation that people are scared about of the stock market, well, that all becomes noise as well because earnings expand. And then those earnings get recycled into investments and the market goes higher. So altcoins should outperform in the next phase once we get out of this corrective phase. We've gone through 1, 2, 3, 4, 5, 6, 7 20% plus pullbacks. And you can't remember those. You might remember the last summer one because that was pretty miserable, but that's it. We deal with this. The volatility is a feature, not a bug. You need the volatility to drive these massive rips when they come. So that's where we are. We've seen this. We should be somewhere close to bottoming. Now, with those 7 pullbacks, we've still had 600% returns from the low. When we go back to 2017, it was more violent because Bitcoin was earlier in its adoption phase and we had 1, 2, 3, 4, 5 30% plus pullbacks, some of them at 40%. So this is more like Solana now, which is more volatile because it's earlier in the cycle. It's more like Ethereum, it's more like others. So this gives you the contextualization of what you're going to have to stomach to make the money. To unfuck your future, you're going to have to learn to deal with volatility. And if you've got any spare income and you can invest, you can buy some of these dips, but be careful later in the cycle. You don't want to overextend when you should be thinking about how do I take money off, but we're far too early for that yet. I talked about we could take lifestyle chips off sometime in the first quarter. Looks like it's pushed out to the second quarter. I'll keep you updated when that happens. But again, I'm very chill about this. When you zoom out, Bitcoin is just retesting where it broke out from. That's it, guys. It's hardly a big deal. When we look at the RSI of Bitcoin, it's like the second most oversold it's been in this entire cycle. These are opportunities. When it gets this oversold, yes, it can chop around a bit at those lows, might even make a new low, might chop, rally, new low, which will then diverge on the RSI. But it's telling you 1 month from now, prices will start climbing for sure. They'll be higher than here. And then 2 months, 3 months, 4 months, we should have much higher prices. So once we've got the corrections out of the way, you start to look forward to, okay, now I can get some real price action going again. Solana got the most oversold it's been, I think, pretty much since the FTX days. It's oversold versus Global M2. It should be fine going forwards. It's a very clean market. There will be plenty of on-chain activity in Solana as we go forwards. It's a broad, deep, rich ecosystem. So nothing to worry about. And I think many of the memes, or a few of the memes, will be Phoenix the rise from the ashes. We will see some great recoveries in some of that stuff too. But remember, that's only for 10% of our portfolio. The risky stuff is 10%. Solana is a core position for most people, and that's a good one. You know, the core positions that I talk about for most people will vary depending on your case. But, you know, I've always used Bitcoin, Solana, Ethereum, and I use Sui as a higher beta bet because I think that's going to do well this cycle. Again, you may choose different names. You may have XRP, you may have something else. That's fine. You do you, I'll do me. Let's just wish each other the best, because that's all we want to do. We want everybody to do well out of this. If this is going to go from $3 trillion as a market cap to $100 trillion, we want everybody to make as much money as possible, and we can fuck it to the banking system and everybody else. We deserve this. This is our system. It's made for us, and it's ours to capture. Help each other out is the key thing, and not fight with each other. Fear and greed. Everyone's fearful as shit right now. It collapsed down to 20, so super fearful. Again, these tend to be good inflection points to start thinking about absorbing. We're seeing exactly the same in equities, funnily enough. The NASDAQ, we've suddenly gone to this massive bearish sentiment. 80% of all surveys are bears. Those tend to lead to almost V-shaped recoveries. So now, can we have another, one or two sharp sell-offs around these levels? Possibly. But basically, it's telling us everyone's got way too bearish, worrying about global growth. They're not seeing that was something that happened last year, and the forward-looking indicators are doing the opposite. So, your Tesla stock, your Coinbase stock, all of these things that you own, they should be fine going forwards. We've just had a growth scare driven by the dollar and driven by financial conditions. That has passed. The dollar is weakening and rates are coming lower. These phases of the banana zone, I get so fed up with people online going, where's my banana? Your banana fell over. Your banana's not ripe. Your banana, blah, blah. The banana zone is a period of time that lasts a year. It is not an instant gratification. You guys need patience more than anything else and need to understand markets. So we had the start of the banana zone. We are now in correction phase 1. That happens each and every time. Look at 2017. It's almost identical. Then, as we go into March, April, May, we start accelerating up again into the next phase of the banana zone. And then we'll have another correction. And you'll be going, oh my God, it's all over. It's all over. Am I going to die? Have we screwed this up? Where's your banana? Again, you'll have forgotten everything that went before it, and you'll be gripped with fear all over again. Then we have the final top into the end of the cycle. My view is that the business cycle is taking a long time below 50. It's starting to expand now. That has probably extended the cycle into 2026. Not a guarantee, not yet a prediction, but is what is in my head because of the structure of the business cycle. So we can probably keep going longer, and that will still give us much higher prices to come.
Raoul Pal's insights underscore the intricate relationship between Bitcoin's price and macroeconomic indicators like the ISM Manufacturing Index and liquidity flows. He highlights how cyclical market patterns and global monetary easing contribute to significant price movements. Pal's projection of Bitcoin potentially reaching $300,000 reflects his confidence in the ongoing market cycle and the broader adoption of cryptocurrencies. He advises patience and strategic positioning, emphasizing the importance of understanding macro trends to make informed investment decisions. As the crypto market evolves, Pal notes that altcoins may outperform Bitcoin during the next bull cycle, driven by increased risk appetite and innovation. His perspective encourages investors to remain disciplined and informed, leveraging opportunities as the market gains momentum. With the potential for transformative growth on the horizon, investors are urged to stay vigilant and adaptable. How do you see macroeconomic trends influencing the broader cryptocurrency market in the future? Which altcoins do you believe have the potential to outperform Bitcoin in the next cycle, and why? Feel free to share your thoughts in the comments.